Taltiva. Armando and I have been working together since 2005.
A long
That's
time,
going to be 20 years next year, Armando. That is
20
some
years.
craziness.
You,
We are getting old. And he's awesome. If you haven't worked with him, I highly encourage you to do so. Your customers will love him. And if he tells you somebody can close, they will. And if he tells you somebody can't close, don't waste any more time with him because if he can't close them, nobody can. And that's about the best thing in my book that you can say about a lender. Just tell me, can I close it or not? And Armando will get you there. So I am very excited to work with him and hear from him this morning about renovation loans. Come on, Armando.
yay, Meredith, thank you so much for having us. Can you all hear me okay? Thumbs up? Yeah, great. And Alyssa, thank you very much for being here and guiding me. I've done a number of these presentations live, but I've never done any virtually. I am leaning on Alyssa and her technology capacity to get us through. So I'm going to start looking here, and can you all see the screen?
We cannot see your screen, but Alyssa can help you.
Yes, so let's go back here and go back to that share button.
Okay.
There we go.
Okay, perfect. Yay, thank you, Alyssa. Okay, so double click
And then we'll just hit share.
there. Beautiful.
And then you can make it
Oh,
screen or
all right, gang. Can you see it now?
Yes.
Yay! Wonderful, wonderful. Thank you. So, all right, gang, we are going to learn about renovation financing, a real estate professional's overview. Why is that important? In this market, I think it's a wonderful opportunity. It is timely because in Florida, we've had a few storms and there are a lot of properties that have been damaged and the owners are either underinsured or uninsured. And that presents an enormous opportunity for us. A little bit about myself. I've been in this industry coming up on 30 years, most of it last 25 years with Meredith here in Florida. I love what I do. This is exciting. If you haven't heard about this, it's because most banks do not offer it. Very few retail mortgage companies offer it, but it is a fabulous opportunity for you to assist your buyers and your sellers. Okay. I'm going to ask Alyssa to either send me a message somehow when you all have a question. That way I can address it while it's timely. So I will just ask Alyssa to help. Okay, course objectives. Here's what we're learn at the end of this. Line with renovation financing is explain to your clients why now is a great time. List the financing options. We'll go over just a couple. There are more available, but we'll go over two: FHA and conventional. We'll list some of the allowable repairs. Describe the steps for the loan process. It's pretty simple, a few extra steps, but nothing earth shattering. And we're going to explain how the inspection process works so that we're all able to be on the same page. We're going to then share some tools that you can share with your clients so that you are building just another avenue for helping your sellers and buyers. This is the timeline. I know that 2 hours is a long time, so 100 minutes is what the states require. We'll go over everything. We'll take a break, 10, 15-minute break. And about benefits, everybody will need a potty break. I know I will. And we can then finish up. The goal here is to learn. I can't hear you. So I'm going to again ask Alyssa to just let me know if there are questions so I can address them. And we'll continue. Three main objectives here. We're going to learn what financing is, how it works, and how you can help your buyers and sellers. Let's start with what renovation financing is. It is a home loan to either purchase or refinance, and the money for the repairs and the remodel or the upgrades are part of one loan. So it's just one loan, all in one single mortgage transaction. The appraisal, and here's the key where it's really beneficial for your buyers and your sellers. The appraisal is based on after completed value. So the appraisal is done with the assumption that the work is going to be done, and the work begins after closing, after settlement. So we get this loan ready, we do all the footwork up front, At closing, the seller gets their money, the real estate agents get their commission. The work begins after closing. So I know that a lot of times sellers are like, oh my gosh, I can't wait for the renovations to be done. Sellers don't have to wait. The seller is selling the property as is. Benefits of renovation financing, gone over a few of them. Any house in any condition. Let me drive this home. Any house in any condition. We can do a renovation loan with just a slab of concrete and build from there up. Most of the time, it's improving bathrooms, kitchens, but really, it's any house in any condition. So, this opens up the opportunity for you to show houses that are in the right neighborhood, but just ugly. In most cases, as real estate agents, I'm sure you've taken buyers to a property, and some of your buyers may not even get out of the car and say, oh my gosh, no, this isn't for me. The challenge for us is to help them change their mind to realize that this is not necessarily what it is. Please imagine what you can make it, and we can get you the financing to do it. Loan amounts are based on the after improved value. Again, that's important because folks will say, gosh, there's not enough equity there to do the work. Here's another really important one. You can escrow up to 6 months of mortgage payments into the loan. Let me say that again. So if let's say you buy a home that is just in really tough shape and the buyer says, oh my gosh, I can't live here while the renovation is being done. How am I going to do this? I can't afford the mortgage payments and pay rent. You can roll in up to 6 months of mortgage payments into the loan so that your buyer doesn't have a mortgage payment for 6 months while the work is being done. Yay! I know you're not,
Incredible.
I can't hear you, but I'm sure that you're all saying, yay,
Hey,
exciting for
Armando,
me.
we do have one
Yeah.
request. Tina wanted to know if you
Yes.
could make your screen full size so that she could see the screen, the slide a little bit more. At the bottom
Uh,
right, there should be a small symbol to do that.
I will do my best. Slideshow. Is that
It
better?
looks, yes, perfect.
All right. I appreciate you letting me know. Thank you so much. And I feel so much better knowing that you're there. Listen, thank you.
Of course.
Okay. Fully
Say that
same
again,
process.
Armando. Can you say that last part again? Because that was I was processing what you was saying there. So you said, yeah, yeah. How does that? How does
Thanks for
that work?
joining us, Benny.
Oh,
What I was saying is that you can escrow payments while repairs are being completed if uninhabitable. That means, let's say that you close on this home, you finance the renovations, but there's no air conditioning, there's a hole in the roof. You really can't live there. You can't move your family into the home. So you can put 6 months of mortgage payments into the loan. The lender's not giving you that money for free, but you can roll it into the loan so that you can live with family or that you don't have to make mortgage payments for up to 6 months while the work is being completed. Did that help any? Yeah. Okay. Fully dispersed at closing. That means that when you're borrowing 300,000, 300,000 is dispersed. The seller gets their portion of the money. Whatever portion is going to renovation slash updates are put into the escrow account. The escrow account then is then depleted as the work is being completed. The escrow funds are put into an escrow bearing account. Don't get excited. It's not going to amount to a hill of beans, but it is it is interest bearing. And there's only one monthly payment. So again, Benny, you asked, what does it mean? You're still going to have one mortgage payment. It's just one loan. It's just divided into the part that's going to buy the house and then into a part that's going to the renovation, but it is one mortgage loan, one mortgage payment. Renovation loans to the rescue. So and I'll ask you realtors to tell me where the market is. But up until this point, we've had a low inventory and high demand environment. Is that kind of still the case? Changing? Maybe we're tipping into a buyer's market. In any case, this is a great option for folks that are looking for homes and can't find the right property because the right property has a lot of competition. Basic economics. If everybody wants the same thing, the cost for that thing goes up. It's when the deals are going to be found where folks either aren't aware or cannot buy a property that needs a lot of work because they may have enough money, enough resources to buy a property, but not enough money to do the renovation. So this is a great vehicle. So there's less competition for those needy houses. So the ugly ducklings are where the opportunities are. Sellers do not need to make any of the repairs. They can sell them as is, which is great for the listing side because here it is, and you've got a pool of buyers that can do a renovation loan. You can win the listings because again, there are that you or them or they opt to. In either case, you have a solution for them. And buyers get what they want. That means that they're creating a personal home. They're creating something that's customized for their needs. And really, it's just a cool option. Okay, challenge for us when we're dealing with buyers is really to change the mindset because most folks, most buyers want to have a move-in ready home. Realtors, you tell me, I think the ideal scenario is to have a 3-bedroom, 2-bath house, 2 garages, move-in ready, and everybody wants the same thing. And again, if everybody wants the same thing, the cost of that thing is going to go up. It, and if we have the option to show them that there is another opportunity, then we're doing them and ourselves a favor. So you obtain loan coverage mortgage for the remodel and the loan. It can be done with FHA, so it's little as 3.5% down. The money that you're borrowing still is tax advantaged. Your primary residence, you still have a tax benefit. In most cases, you can still use the interest that you pay on your mortgage as a tax deduction. We overlook that because when we say, hey, we can borrow money, credit card, that we can borrow money, our account, that ends up being an expensive option because, again, the least expensive source of money is a fixed rate loan on your primary residence. Create a dream home. Okay, you can create your dream home. Build immediate equity after renovation. I'll show you some examples of some real life deals that we've done and how that works. Take advantage of as is or cash only properties. How many of you have worked with buyers and you found a home and you say, oh my gosh, this would work, but it's cash only? Raise a show of hands, anybody that's had that situation? And your sellers are saying, hey, sorry, we can't contemplate that because your buyer needs financing. I am happy to chat with the listing agent and explain to them that this is a viable and doable deal. And oh, by the way, Mr. Seller, you may be able to get better than what you were thinking because this is a buyer that's committed to a home versus an investor that is looking to give it a little lipstick and then flip it. So it's a win for both sides. Instant improvement in the quality of life. Have any of you worked with families that have special needs children or elderly parents that need their home customized? Maybe they need the bathrooms fixed so that they have the ability to accommodate a wheelchair. Maybe they need to have ramps built up so that folks can get in. This loan can facilitate buying the property and doing those renovations for quality of life. Cool part, no minimum work is required, appliances and pools. We'll go over that in just a second because this is also a strategy to save deals that may be going sideways because of appraisal. Again, you can include energy efficient tools or systems. That's what the word I'm looking for, systems. So can you use this type of financing to buy a home and put in a solar panel system? Can you build this and create something that change windows to make them more energy efficient, change doors, add insulation? Yes and yes. So when you have a home that meets the buyer's needs, but needs improvements because it's ugly or whatever, this is a great option to keep in mind. Melissa, how are we doing for time?
We are doing great. We're 3 minutes out of 12. Right at noon.
Super. This may not be an issue anymore, but I'm sure if you've been in the real estate industry for the past 2, 3 years, bidding wars were a thing, right? And you say, oh my goodness, have you had situations where a buyer said, you know what, I'm willing to offer $15,000 more for this property? And here's a real life scenario. So in this case, the home, you know what, let's go to the next one because I think the next slide will be better. Left side is traditional FHA financing. Right side is what you can do with renovation financing. So we're buying a home. We're buying a home that appraised for 300,000, but the buyer was anxious to secure this property and offered 315. However, it only appraised for 300. Oh my goodness. What do you do? With the traditional financing, the buyer has to come up with 15%, I'm sorry, 3.5% of the 300,000. That's $10,500. And the additional 15,000, which totals 25.5. So far, everybody with me? Sorry, I don't know how to get rid of
Yes.
this
Yes, we are good, and we're getting some good
beeping sound.
feedback,
Okay.
in the chat as well.
Okay. So the base loan amount on this, it's FHA requires 3.5% down. So the base loan amount is 96.5%. In this scenario, it's 28,950. We're going to use a rate of 6%. This is not necessarily what it is today. Just wanted to use this as an example. The monthly principal and interest on this loan, not including taxes, not including insurance, is $1,798.66. So again, borrower has to commit with this scenario. Buying the property for 315, it appraised at 300. So they need to come in with more money because it didn't appraise. That's happened, right? Maybe? All right. This is how much money the borrower needs. 25.5 just for the down payment, not including closing costs, and monthly principal and interest is 1788. Moving over to the right, renovation financing. Same house, same situation. They buying it for 315,000. The appraisal is 300,000. However, we flip it into an FHA 203K. They're going to do some paint and appliances, cost about 7,000. They are now buying this property for the 315, which they agreed to pay, plus the $7,000 worth of renovation. They're buying this house there, or acquisition, total acquisition is 322,000. So far, so good. Okay. The down payment is going to be 3.5% of that 322,000. So what they need for down payment is 11,270 versus 25,500. And they're getting appliances and getting a freshening up of their property. And the question I get often is, what's the monthly payment? So in this situation, the base loan is 96.5% of 322. Loan amount is 310,730. Rate is 6.5%. There is about a 0.5% rate difference in a renovation loan versus a traditional loan. So the monthly payment in this case is 1964 versus 1798. That's about $160 difference thereabouts, but that's a difference of over $12,000 in initial out of pocket expenses. And when you say, oh my gosh, why would they pay higher, an extra 0.5%? Let's consider what options are available. Again, credit card, which is 25, 26, 28%. They can take money out of their mutual funds, and the market has been returning 8, 9, 10%. Why would you take money that's earning you 10% to save 6.5%? Doesn't make sense. At the end of the day, this is really cheap money to do a renovation, and you're walking into it with the opportunity to make something really beautiful. I'm going to pause here because there are a lot of numbers, and I'm sure there are some questions. This is the guts of it. This is really the beauty of this financing option. Hows and the whats we'll walk through, but I'd like to just open it up for questions in this portion because this is the guts. This is the beauty of this deal. Questions?
Armando, we just got a question from Mr. Bob Spanks. He asked if you would make the PowerPoint available.
Happily, yes.
Perfect. I'll
Yes.
get that from you.
Yeah, we can. But if you want a copy of this PowerPoint, just send a list or send me an email and we'll get it out to you. Not a problem at all. Other questions?
Armando, where it says can go up to 330, is that there's only 10% above appraisal? Is that a limitation there?
Yes, great question. Thank you for asking that question. So we're assuming an appraisal of 300,000. So with this type of financing, the renovation and the acquisition can go to 110%. So 10% above that appraisal. So they can go up to 330 on this appraisal of 300. Wild, huh? This is why whenever you're having a situation, a concern with an FHA appraisal or any appraisal not coming in, consider, oh my goodness, can we move this over to an FHA 203K? Because you get an instant 10% wiggle room, even if the appraisal doesn't go up. Again, the reason I showed you this is because the appraisal didn't go up. We're assuming the same appraised value of 300,000, and they're able to finance the whole thing plus some renovations. Exciting?
Yes, Armando, you have to have a reappraisal with the proposed improvements, or are you going to talk about the procedural parts later? Am I getting ahead of myself?
It's a
Yeah.
great question. It's a great question to address now, and then we can repeat it later. There's only one appraisal required, and it's going to be as completed. So it's subject to the appraisal is done. The steps are you have a buyer, the buyer gets a contractor. We'll talk about the renovation consultant. All the paperwork and the bids are done upfront. Those are then presented to the appraiser. The appraiser says, oh, this is the work that's going to be done. He finds comparables. Assuming the work is completed, new roof, new bathroom, new kitchen, whatever. And then he says, once it's done, this house is going to be worth this much. And that's how we base the loan, based on the after improved value.
We could change loan products. So if we started out traditional
Yep.
and it's a change, and we would have to have another appraisal again, obviously, because we'd have to be doing under these, but we could switch midstream. Okay, good.
You can, and if we're doing FHA to FHA, then the appraiser is really going to say, okay, show me what renovation is going to be done. We will update that appraisal to show that it is now a 203K and that all this stuff is going to be done. Yeah. Great question. Any others, gang? Okay, we'll move on. Benefits for sellers. They don't have to spend any money out of pocket. Again, when the negotiations start and your buyers say, hey, we really need the roof to be replaced, AC to be replaced. Sometimes, again, sellers don't have the money or the want to do it before they sell the home. So this is an opportunity to say to your sellers, you know what? Never mind fixing the roof, but let's give our buyer a heavy concession, strong concession. With FHA, you can go up to 6% of the purchase price. That can be given to your buyer to buy down the rate, to just a seller concession can be used for anything except the down payment. So for your sellers, you can market properties as is. No work is required until after settlement. You can increase your pool of buyers. Again, folks that are thinking, oh my goodness, I can't afford a home now. We can do this type of financing of manufactured homes as well. What? Yes, you could do a 203K loan on manufactured homes. Again, it has to meet all the requirements for the lender for a manufactured home. But if it doesn't, and the renovations can be done to bring it up to code, then it's a deal worth pursuing. Aged housing stock. Does anyone have what average age of houses in Central Florida is? 39 years.
Oh, wow.
I looked it up, just 39 years. That's the average age of home. Obviously, there are some newer homes, but there are also some older homes. Aging housing stock, sometimes the piping hasn't been redone. If you all live in Florida, I know I have at least one Massachusetts crew here. When you're shopping for insurance, one of the key questions is, how old is your plumbing? How old is your electrical? And oftentimes, insurance companies will say, no, I'm sorry, that's way too old. We can't insure you. So again, another opportunity to say, hey, you know what? And I work with insurance agents that are very well versed in this, but you can say, I'm buying this home. I'm doing a renovation loan. The plumbing and the electrical are going to be done as soon as we close. All this is going to be renovated. So again, opportunity for home buyers that may be blocked out because they can only afford older housing stock. It can be used for roofs. But know so many basements here in Florida, but Mariano in Massachusetts, you can use this to create a basement of finished basement, decks, patios, fences. Are you all familiar with what an ADU is, an accessory dwelling unit? Yeah. In many communities, ADUs are now legal. What that means to you is that you can create a housing unit for in-laws, for family members, or to rent out. Um, so you can use this financing to build an ADU, whether it's in your basement, a separate ADU, build it in your garage. But ADUs, I think, are a thing of the future, and this financing option helps you to finance them. Benefits to your business. Differentiate yourself. If we're not talking to buyers about this opportunity, then they won't, because this is not, when you're going out to show homes or talking to borrowers, again, me included, I want the perfect house, move-in ready, at the best price. Something he has to give. I had a Greek client that said, "Hey," and he was in the food business. He said, "Armando, you can have some of these things, but not all of them. If you want good food, you can't have it cheap. If you want to fast, you can't have good food. So you got to pick something. You can take more listings, sell more houses as is. Again, increase your pool of buyers. When you're talking to folks that have a very specific requirement, again, including, hey, I like this house, but I want a swimming pool or I want to build a spa. Absolutely, no problem. We can do that for you. If you like the house, you like the neighborhood, we can customize it. You can customize it any way you want. When buyers are open to this option, you're going to have quicker decisions because they now realize that what they see is not necessarily what they can have. What they see is just today's reality. It is only limited by their imagination, what they can create. It's really very cool. Convert more homes with potential into closed deals. Again, oftentimes we have clients that want something that doesn't exist. It exists only in their imagination. Now you can say, hey, if you can imagine it, you can do it. Let's just find the right location for you. And again, no work is done until after closing. This is wonderful for the seller because the seller's like, oh my gosh, how long is this going to take? We don't have to worry about that. All the work begins after closing. So these next two slides are examples of real life transactions that I've completed. The first one, Homestyle, which is the conventional loan version of the 203K. We had a purchase price of call it 250, renovation of 93. This person was an attorney in Orlando that needed to make a bigger bedroom and add a bathroom. So she found the right location. She found everything was right about the house, but not big enough for their needs. So she bought the house for 250, put almost $100,000 of renovations into it. So total acquisition was 343,726. So purchase price plus renovation equals total acquisition. Down payment of 5%, which was 17,186, and it's 5% of the total acquisition. Loan amount was 95% of the total acquisition, which was 326,540. The appraisal came in with the renovations at 400,000. She walked into this deal with immediate equity. My math was bad. It's $50,000 worth of equity, not 73. So my apologies. But again, instant equity. And this was in a competitive housing environment. Next one, FHA 203K, the top one there. Purchase price of 176. This was a few years ago. And this family did renovations of 72,000. So again, purchase price plus renovation equals total acquisition. Down payment is based on the total acquisition, which was 3.5%, which is 8,680. Our loan amount was 239,320. Next line. This appraised for 220. Do you see anything funny about that? Total acquisition was almost 250, praised for 222.5. It came undervalued. We closed this deal. Our borrower got the loan of 239,320. FHA allows you to borrow up to 110% of the appraised value. So if you take that 222,500 times 110%, you get about 240 something. So that 239,320 was just a shade under the maximum that she could borrow. But how often have you seen a lender give a bigger loan than the appraised value?
Never.
This is real. It happens. I closed this deal. Um, Next one, FHA. This happened this year. This third example happened this year. A client found a property which was marketed as cash only. So don't be afraid of the cash only listings gang. When you see a property that you think your buyer may like, just say, let's take a look at it. I am happy to reach out to the listing and selling side and let them know. And that's what I did with this deal. I reached out to the listing agent. This was a VA REO property. It was owned by the Veterans Administration. Listing agent said, hey, it needs a new roof. It has no floors. The ACs are junk. There's no way we're going to get financing for this. And I said, yes, there is. If we do a 203K loan, our borrower is well qualified, not a problem at all. We will close. And in fact, we did. Purchase price was $336,853. It needed a new roof and it needed some flooring and a couple of other things. Total acquisition, again, purchase price plus renovation equals acquisition price. The acquisition price is what we use for the down payment. In this case, 12,843. Loan amount was 96.5%. The borrower, the appraisal came in at 390,000. This was 3 months ago, gang. How many situations have you run into where your buyers walk into instant equity in this? Not a little bit. That's over $20,000 worth of equity 3 months ago. Excited? Yes. I'm the only one excited here. All right.
We're getting some comments from Tina. She says, yeah, it's exciting.
Okay, great. Okay, the process. Shop backwards. What that means is when I'm pre-approving your client, let's say I pre-approve your client for 400, let's say $400,000. That means that when you're shopping with your client and they're considering a renovation loan, they're going.
Might have lost you, Armando. Can you hear us?
I can see him frozen. Does he look frozen to you guys as well?
Yes. I'm going to go check in on him.
I'm looking forward to hearing all the procedural hoops we're going to have to jump through for this. Mondo? How are you?
Great. Nice to see you. Thanks for sharing. I think my
Or are you going to email me the PowerPoint?
Yes, it's in your email.
Oh, okay. Hold on, you guys. We're relocating Armando. Stand by. We've got this. I promise.
To get instant equity, like that's pretty cool. Yep.
Just got an appraisal for a house that needed renovated, and they appraised it based on the completely renovated house.
Okay, no, actually I was talking to the host, but I can't hear her.
I could share my screen too and see if maybe we can just do it that way. Oh, I think you're muted, Miss Engel.
Can you get them to work, Alyssa? Can you get the
Yes,
slides to move on yours? All right.
yes, ma'am. We'll do it that way. Let me just share that.
It's
Can
all
everyone
You
see
guys are
that?
awesome. Yay. Thank you
Okay,
so
now
much.
let's go back to where we were. We were- I think we were around.
The work backwards slide, please.
Was it this
Keep
one?
going. The one. No, keep going. I had the photo of the TV celebrities on it. There we
Oh,
go.
yes,
Right there.
correct.
Thank
There
you.
we are.
There we go. Yeah, and the TV celebrities, yeah, Chip and Joanna Gaines.
Yes,
So
yes.
this is a great reference point for our buyers because our buyers are familiar with these folks. And if we start with, hey, have you seen Fixer Upper or any of the renovation shows, it shows them, hey, remember that it's about what we can do, not necessarily about what exists. So when we shop backwards, we're actually starting the beginning process starts same way that all transactions start. Pre-approval. Let's make sure that your buyer has the capacity to actually enter into a transaction with you. Once we know that, I'm going to let you and your buyer know here's how much of a house you can buy. And then again, we're going to be looking at, oh, if we pre-approved him for or pre-approved the family for 400,000, then we're going to say, let's look at this $300,000 home. I understand it needs an enormous amount of work, but you can put $100,000 worth of renovations. You're still at your $400,000 budget. And now you're going to have a customized, personalized home that fits your needs. And it's a great way to narrow down the scope for folks that are saying this house doesn't quite make it. So process. We're going to start with the pre-approval. We're going to before the contract, we'll have a conversation because two big pieces here of the renovation process are a contractor. Contractors need to be licensed, insured, and vetted by the lender. Depending on the size and the type of renovation financing, we're also going to engage a renovation consultant. Alyssa, would you mind forwarding the slide? Thank you. We'll talk about that in just a second. Renovations are everywhere: repairs, flood damage, updating and modernizing, adding the wrong size. We've already talked. Converting properties from a single family to a multi or a multi to a single family. That obviously requires zoning approval, things like that. That you can do with your attorney. Meredith is wonderful at helping you with that. So if you run into a situation where you'd like to do that, please consult an attorney. What I can commit to you is that I can get you the financing to do these projects where people say, oh my gosh, I'm not sure how we're going to do this. Next slide, please, Alyssa. Keys to success: turn renters into homeowners. Become your local fixer-upper specialist. I want to get to the mechanics. Meredith mentioned that we need to go there. Next one, please.
They're not changing on the screen.
So do
What
you
do you
see action plan?
see? Yeah.
They are fixer upper and the process of the shop backwards.
Yeah, we're still seeing the Gaines couple.
Okay.
Oh, okay.
Yeah, mine is moving. I'm on action plan search. I'm on the right slide. That I guess it's moving.
Okay. Let me try this way. Is everybody seeing the action plan search?
No, I
Yes.
still have the Gaines couple.
Chip and
Huh.
Joanna.
That is odd. Um, I'm not sure how to fix that.
Yeah, minimize your screen. Was it wrong? Minimize it and then put it back big. Maybe it'll catch up with what's going on.
Sorry about this, guys.
Yeah, it's still on an action plan and it's big again.
Okay.
No, I minimized. So I still have the
You
Gaines
minimize,
people, and
came
now it's
back, and it's
just
still on
smaller.
Gaines. That's odd. Yeah.
It really is.
Yeah. Can I talk through this and maybe Alyssa can keep working through it? The action plan of how, two parts, action plan. What can we do as realtors to start finding opportunities that we can then start sharing with our clients? Look at listings that have above average days on market. Look at opportunities where your cost per square foot is lower than the surrounding homes, homes that are priced low for a specific area. And the question is always, there's got to be something wrong with it. You hope that there's something wrong with it because it means that there are going to be very few buyers that can either work it or have the knowledge to get it done. But you do, and you can share that with your buyers. When you find listings that are as is or cash only or fixer uppers, that should be an opportunity. You should see dollar signs when that comes up, because you know that cuts out better than half of the buyer population, because unless they're cash buyers, they're not going to be able to buy this home. Homes in obvious need of repair, outdated floor plans, etc. Alyssa, can we try moving on, please?
Yes, ma'am. Sir.
You can call me ma'am. Just don't call me late for dinner. Oh,
It's a reaction to working in office full of women. I apologize.
I got no worries. So let's start with the types of loan programs. The first one is that we've talked a lot about is the FHA 203K. It's just an FHA loan with a renovation consultant component. Loan amounts will go up to county limits. I think they're 400 and change in Central Florida. The loan limits go up with the number of units. So if it's a 2-family, it's higher, 3-family, it's higher, 4-family is higher. And you can use this type of financing, and I recommend it for folks that are looking to buy their first home and looking to buy a 2 or 3 unit property. This is a wonderful way to start building a real estate portfolio. No minimum repairs. FHA, however, is for primary residents only. Credit scores for this minimum is 580. 580 gang. So this is a great. So I don't know if any of you have shopped for construction loans, but construction loans require borrowers to have 757 in the 700s minimum. A renovation FHA 203K will work with borrowers that have down to a 580 credit score. That's huge. Again, can be used for single family, 1 to 4 units, mixed use. I know that some areas in Massachusetts, I don't know if Mariano's still on, but Worcester has some mixed use property where you have some commercial on the first floor and then residential upstairs. As long as at least 51% of the square footage is residential, we can use this financing to renovate the residential component. You can use this for purchase, or if any of you know of folks that have homes that have been damaged by the recent storms and aren't sure how to come up with the amount that the buyer has to put into the deductible, the insurance deductible, that's the word I'm looking for, then this may be an option. Can roll 6 months of monthly payments into it, and all work is completed after closing.
So if you're a VA, Armando, with a reno, I mean, with 203, are there any restrictions or limitations? Would you still be able to benefit from that?
Great question, Benny. There is a VA renovation loan available specifically for VA. We can chat more about that. The rules are a little bit different, and because of time constraints, wanted to focus on the most popular FHA and conventional, but VA renovation is available then, specifically for veterans. Yes.
Good.
We can chat more about that. And if any of you have questions about a renovation loan for veterans with VA, we can chat more about it, and it is available. Yes. Alyssa, can we move to the next slide, please? Okay. The next type of financing is Fannie Mae home style. It's, again, conventional loan with a renovation component. Loan amounts up to the county loan limits. I believe in our area here in Florida, it's 809 loan amount, which is huge. Some higher cost areas that obviously is a little bit higher. You can use this loan for primary residence, second home, and investment properties. Gang, second homes and investment properties. That means if you have a buyer that's looking to invest and they want to buy a rental property but can't find anything that really makes sense in terms of cash flow, this type of financing can be used, and I've used it for folks that buy a home that's really non-financeable any other way. We do the renovation loan and get them into a nice cash flowing property. Can be used for single family, 1 to 4 unit properties. And keep in mind that as of a few months ago, call it a year ago, you can buy a 3 unit property, use conventional financing with 5% down. You can buy a 3 unit property, do a renovation loan with 5% down as a primary residence. That's crazy. Wonderful opportunities. Credit score for conventional minimum is 620. Maximum renovations with conventional financing are limited to 50% of the after improved value. What that means is that if I after improve the value of the property is 400,000, I can have up to $200,000 worth of renovations into the project. FHA doesn't have that requirement, but in most cases, this should not be a deal breaker. Appraisal is done after improved value, can include luxury items like pools, docks, summer kitchens, customized bulkheads, ADUs, can be used for purchase and refinance. You can complete unfinished homes. How many of you have run into situations where, gosh, that's a great looking home, but they never finished building it?
Mhm. Yes.
You can use this to buy the home and finish finish building the home. And again, the borrower can finance up to 6 months of mortgage payments into it. All the work is completed after closing.
On that. As long as you meet their appraisal requirement,
Yep.
you could borrow $300,000 under this plan.
Yeah. Drill down. How we do? Should we take a break now, Alyssa? We're about halfway through, right? Time? Yeah.
Sorry,
Okay.
fine audio. But yes, we have about an hour left to go. So yes, if you like to.
Let's take a break here, and then we'll dig into how to get it done.
Procedure.
The procedure. I think I've got buyers in the fact that this is a viable and great option. Now we'll talk about the meats and potatoes of how to get it done. What time is it? 12:33. I'm going to come back at around 12:45. Cool.
Okay.
I'll
That
see
works.
you all 12:45. It's on you. Do you just leave it there? Yeah.
Hey, Alyssa or Meredith, can anyone hear
Yes.
me?
Yes.
Yes.
All
We
right.
can.
So my screen share hasn't changed since the gains people, which is what I still see. If I leave the Zoom and try to come back in, maybe that'll change my screen view.
Yes, I think that would be great. And your attendance will be affected since we are recording this. So we are aware that you've been on since the start.
Okay. So I'm going to leave now. I'm going to come. If I leave right now and jump back on, what do you think?
Mhm. Yes, I think that should help.
All right. Let me do this right now for you.
Okay.
Thanks.
And I'm good. I'm gonna do the same, Melissa.
Okay, wonderful. We'll see you back here in a few.
Okay, everybody. Good to see you back. Now we're going to go. Now we've heard all the good stuff, right? Now we're going to figure out the meat and potatoes of how you actually make this work in a deal, including some time frame to be realistic with your buyer and the lister as to how long some of this could take. But I got to tell you, I personally am excited about this because I'm trying to find a house and it's rough out there. Okay, hold on one second.
Hey, Meredith.
Without further ado, here comes
Yes.
Armando. Thanks,
Ron.
guys. Ron, I
Ron
can
is-
see you. Can you see us?
Yes.
Perfect.
Can you see correctly?
Oh, well, I see you in the large screen. I don't see the share.
Yes, I took it off. Let me go ahead and reshare.
Keep our fingers crossed.
Okay.
All right, we can see it. Can you see it, Ron?
Yeah. Fannie Mae home style, conventional.
Yes.
Yes. Yay.
It
All right,
says-
here comes the star of the show.
Welcome back, gang. And thanks for your patience. Really appreciate it. So, Alyssa, so basically we've talked about two types of financing products, 203K and the Fannie Mae home style. There are others, I think, that I mentioned. There's VA. These two are the most popular, but certainly we can talk one-on-one. Give me a call. We can chat about what options are available for veterans. Alyssa, can we move the slide forward, please? Thank you. Drilling down. Again, this is a comparison of what a regular loan looks like and a renovation. The big in red there, the big difference is obtain the work right up prior to the appraisal. And then, Alyssa, if we move forward, we'll go to some more typical projects. This again is just showing you what can be done. Almost anything can be done. Refinishing a basement, adding the swimming pool, landscaping, which options can be completed will depend on which type of financing. Which type of financing really depends on your buyer and what they have in mind. Alyssa, can we move forward? Renovation loan process. Okay. Number one, pre-approval. We really need to figure out what your buyer can afford. That's not news to any of you. You know that before you start showing homes, you want to know that your buyer can afford to buy the home that they're looking at and that you're showing them. Second, find the property, make an offer. But once we know that they found a property that they want to make an offer on and they're considering a renovation loan, you must choose two things, the renovation consultant and the contractor. Those are the two key pieces of all this. Renovation consultant, liaison between the borrower and the contractor. The renovation consultant is going to assure that the things that need to be completed for lender approval are completed. For example, let's say you have a hole in the roof. The hole in the roof has to be addressed before new flooring, has to be addressed before high-end lighting. We start with what's needed. Then the borrower says, hey, I'd really like high-end finished floors, high-end lighting, etc. The renovation consultant says, okay, here's what we need. That then goes to the contractor. The contractor now has a roadmap of, okay, here's what we need to get done. Contractor puts together a bid, and the bid is very specifically formatted. It needs to be what's being done, what the labor costs, and what the material costs are broken down. There's a format I can share with the contractors. The contractor needs to be licensed, needs to be insured, and needs to be vetted by the lender. What does that mean? There is an application that the lender will send to the contractor asking them for their background, basically making sure that this contractor has the wherewithal to finish the proposed job. This is really the only place where I found these deals get wrinkly. I've run across wonderful contractors who are either not very good with paperwork and say, you know what, this is just too much. I don't want to do it. So as soon as we know that the renovation, that your buyer is thinking about a renovation loan, we must at that very moment start looking for who the contractor is going to be. I can certainly make suggestions. If you all have good contractors that you like working with, let's give the buyer an opportunity to have a conversation with them. Here's what I've come across with that has created heartache for me. Borrower says, hey, my uncle is a contractor. Turns out he's not a contractor. He's a handyman that's not licensed or insured. I have my husband is a contractor, cannot be the borrower and the contractor. I've not found a lender yet that will allow the contractor to be the same as the borrower. If they have the same last name, it'll raise questions that we really don't want to answer. Now, that said, if a contractor and a borrower have a relationship, the contractor can use any sub they want. Let me repeat that. If the contractor is not related to our borrower and the contractor wants to use any sub, they can use any sub they want. The funds are going to be released in draws to the contractor and the borrower, joint checks, or if the borrower approves that we send money directly to the contractor, that can be done as well. But the contractor has the option to use any sub that they want and pay them directly. But the money is never going to be given to the borrower for the work completed. Did that make sense? Money for the work is going to be given to the contractor upon completion.
Armando,
Yeah.
I'm sorry to interrupt.
No.
Let me ask this. The whole process goes through, the lender approves the contractor, the money is then dispersed as the project is going on.
Yes,
What
sir.
happens if at some point in the renovation, the contractor finds, oh, we messed up a little bit here and we need another $7,000 to complete the project. Then what?
That's a perfect question. Thank you so much. And you're not a plant, right?
No, I'm overthinking.
No, that's perfect. It's perfect. So there is something called a contingency. In renovation terms, it's called a contingency. Depending on the status of the property when the contractor goes out. Does it have power? Does it have water? Because not having power, not having water when the contractor goes out obviously raises issues of, oh my gosh, we don't know if there's going to be a leak. I don't know if this place is going to go up in flames the moment we turn the power on. So the contingency is higher for situations where there's no power and water, but there is a required anywhere from 10 to 20% contingency. What does that mean? Let's say there's $100,000 worth of renovation. The lender is going to require an extra 10% for contingency if there's power and water, up to 20%. So in this case of $100,000 renovation, they're going to require an extra $10,000 if there's power and water, or up to an extra $20,000 if there's no power and water. In case there is, oh, we didn't realize that there was this type of damage. And the next question, Ron, is what happens to that money if it doesn't get used? The money goes to lower the principal balance. So that money is the borrower's money. That money gets used to pay down the principal balance. Ron, did I answer your question? Yeah?
Yes,
Good.
thank you.
Oh, great. Great question. So again, the key here is once we know we have a client that's considering renovation financing, we need to identify the contractor as quickly as possible. Bar none has been the biggest heartache I've had with these types of deals where a contractor just doesn't want to or can't fill out the paperwork. And now keep in mind, if you've already put the property into contract, we're all on the clock. So how long should you assume, or if you put a property into contract and you got a great buyer, 45 days is probably the tightest we can get because you're going to have a contractor going out there to review the property, to write up bids, and you're going to have a renovation consultant. So when you put together contracts, this type of financing, it should be transparent for all parties that this is a renovation loan and that there will be contractors going out to take a look at the property to put together bids. But please assure your seller that all this is not done prior to closing. They don't have to do anything other than to allow access to the property. Please. Yeah, Benny.
So I'm just thinking here, what if there's a situation, say, where they say the contractor go ahead and starts working on the property, and then say maybe something in the vetting something is found out later, maybe questioning the contractor's licenses or something like that, but the process is already started. Or if there's some type of disagreement there while the home has been worked on, how is that? How would those two situations be dealt with?
Benny, that's a great question. Those are two questions, actually. The first is, what happens if the contractor isn't properly licensed And then two, what happens if the contractor and the buyer don't get along? So let's address the first question first. What happens if if the contractor's license is found to be incorrect? The vetting process starts before the closing. So the lender is going to review the license, the insurance, and basically go through everything that this contractor is providing. I've had situations where a contractor gives me the license of another contractor thinking that the lender will find out. They will find out, man. Lenders, that's their job for lenders, to basically make sure that the borrower can repay the loan and that the contractor can finish this job. So I've never had a situation where the lender said, no, we don't want to work with this contractor anymore because they were not properly licensed. They've done all that up front. Second situation where the buyer and the contractor, or the borrower and the contractor, don't get along. It's good then to start to, that's why we want the buyer to actually give the final go ahead with that contractor. Can it happen where you change contractors? Yes, but it's not fun for anyone. It's a possibility, Benny. Contractors can die, right? We can all get hit by a bus. It's possible. We want to avoid that at all costs. We want the buyer and the contractor to have a working relationship up front so that it goes smoothly for everybody. But to answer your question, Benny, if you're the real estate agent in this process, you've already been paid. The commissions, the seller gets paid, everybody gets paid at closing before the work begins. So that issue of what happens when the work begins, sure, you're going to be sympathetic and helpful to your borrower, but you are no longer depending on this relationship to work to get paid. You've already been paid. Did I answer the question?
Yeah, actually, I did not know that in a renovation that a realtor would that there's a commission in renovations. I thought that was only with the sale of the property. I mean, or
But it is, sir. So your commission is going to be based on the purchase or sale price of the property, not the renovation amount. But
okay,
but the point is, whatever that amount is, you've already been paid when the work begins.
okay, got you. I'm thinking along the lines of someone already owns the home, but they just want
I
to
see.
renovate it. Yeah.
Perfect. Same steps. We're going to make sure that the contractor is licensed, insured, vetted by the lender. And then again, we're going to hope that the relationship that the buyer and or the borrower and the contractor stays positive. And I understand, like,
Okay.
things happen. It's a real world and we can address it, but it's not a good place for the buyer to be. Any other questions along those lines? Oh, so again, we have now the renovation consultant and the contractor working together. The contractors put together the bids, go to the appraiser, then does the appraisal subject to all the work being done. Again, if it's an FHA 203K, we have 10% wiggle room. We close and then the work begins. We close, all real estate agents get their commission, seller gets their money. Basically, all funds are just distributed, and now the work can begin. The work should begin within 30 days of closing and should be completed within 6 months of the closing. It can go longer if for larger projects. Some lenders will allow up to a year, depending on the scope of the project. But generally speaking, it's a 6-month time. Question so far? Can we have the next slide then, please, Alyssa?
Yes. And can you see the simple steps for speedy closing?
See, thank you. Thank you.
Yes.
Meet with the borrower. That's item number one. I know that especially during COVID, we were sending buyers out to just scope out homes and look at them. Meeting with the borrower, especially for this type of financing, is a big deal because if they walk into a property, they have no idea that, oh my God, this property that is in shambles is something that I can really buy. So it's up to us to continue to educate them and encourage them and say, hey, do you like the location? Does this neighborhood work for you? Think, what could you imagine this be? Have you watched Chip and Joanne? They can convert any house into something beautiful, but we need to be there with them to encourage them and guide them because on their own, they will pack. Borrowers and consultant meet a property. Again, it's important that the borrower and the consultant meet, because the borrower is going to say to the consultant, here's what I'd like to do. And the consultant is going to say, great, we will work with that, but here's what needs to be done. You definitely need to address that hole in the roof. You definitely need to have an AC system. That needs to be part of it. And once that's addressed, then we can look at the high-end floors and the high-end lighting. Once the renovation consultant has done their write-up and the contractor has put together their bid, then it's submitted to the appraiser. The appraiser then does a one appraisal, subject to value, not two. We don't care what an as-is situation is in most circumstances. Every so often, lender will ask for an as-is appraisal, but in this case, what we're looking for is a subject to. What will this property be worth once all the renovation has been completed? Questions on that? Oop, oh. The HUD consultant, what do? They're required on all 203K standard loans and Fannie Mae home style. There is, if you Google 203K consultant or HUD consultant, you'll see that there's a list of folks. If it's in my market or someone that I can give you guidance on whom I've worked with. But again, at the end of the day, it's great that the borrower be involved with choosing, so that they have matching personalities. And the 203K consultant has a menu of what is it that we need to do? Here's what my cost is going to be. Meets with the borrowers. Feasibility inspection list require repairs. Again, this is something that the HUD consultant does. They put together a feasibility inspection, basically saying, here's what needs to be done. You got to fix that hole in the roof. You got to put in an AC system. And then they'll start talking about what the borrower wants in terms of beautifying the property. And then they can complete that scope of work for the lender, work with the contractor, put that all together. Both those items are then submitted to the appraiser. Inspection and approved draws. The renovation consultant will also be the eyes and ears for the lender. On a large project, the lender will require the HUD consultant to go out and verify that a portion of the work has been done. Let's say there are 5 draws. So at draw 1, about 20% of the work has been done. The contractor says, hey, I need money. Renovation consultant is engaged. Please go out, verify that the work has been done. The renovation consultant reports back to the lender. Yes, it's completed. Release those funds. So the renovation consultant is also going to be the entity or the person that is going to verify that the work is progressing as it needs to, and being the eyes and ears for the lender to verify, yeah, that work is completed. We can release that money. And then does the final inspection, says performs the post-closing draw inspection, basically says, yeah, it's all done. All monies can be released. We can release that. Remember what Ron asked about the contingency, the 10 or 20%. Then we can figure out, okay, how much is left? We'll use that, pay down the principal balance for the borrower. Contractor must be insured, must be licensed, must be insured, must be licensed. Should not have the same last name as our borrower. I say that because every so often, again, my spouse or my brother is a contractor. If they have the same last name, it's going to raise a red flag. Let's avoid it. If you happen to have a good relationship with a contractor that meets all the criteria and they're a cut, I honestly am not going to ask the question, but if the lender asks the question, it has to be answered. Borrower chooses. At the end of the day, it is the borrower's choice. I can certainly give them guidance. You can certainly give them guidance, but it's ultimately the borrower's choice who they end up working with for a contract. It's important, however, that we give them encouragement to do it quickly. Again, contractors have been the source of my heartache, because we're under contract now. We have 45 days to close. Borrower's done everything. You've done everything. I've done everything. But until the contractor gets those bids so that we can submit them to the appraiser, we are on hold. We can't move forward. So we really need to have that contractor as engaged and as enthusiastic about this whole project as you and I are. Does that make sense? And if the contractor is dragging your feet, we have to say to the borrower, hey, ensure that we have to use whatever leverage is available to us to move the contractor forward. Okay, right at the bottom of that slide, no relationship with the borrower. Again, should not be, cannot be the borrower, should not be borrower's family member. The lender's going to
So
ask you. Go ahead.
if they have a common last name like Smith, but they're not related.
The lender will ask Benny, and if you say they're not related to me, they'll say, okay, sure. But again, if they're related to you and they have the same last name, lender may say, no, I'm sorry, we can't use this contractor for this project.
Mm.
Did that answer your question?
Yes, yes. I just noticed sometimes people have common last names and they're not related. So now you got to
No
show
need
the
to
family.
explain.
I don't know. No, this person not related.
Great question. No, we are not going to ask for any blood samples or family history. No DNA tests. No, but it will be need to be explained. The question will be asked for sure. Great question, Betty. Contracted bids. It's going to will provide. I'll get the contractor the format that's needed, but it's not it. What it cannot be is it something that says, "Hey, we're going to upgrade the bathroom for Armando, and total cost is going to be $5,000." No, it needs to be a detail of who he is. It's going to be a detail of the materials that he's going to use, specific materials, what labor costs are being incurred. It has to be very detailed, line item by line item. If it's going to be flooring, how much square footage. Again, the key here is that the contractor that's engaged needs to understand that they're going to put it into the lender's format as the lender requires it, not as they would do it with just anyone that is hiring them. This is the lender is driving the money here, and the lender is going to be driving the format of the bid. The contract will need to be signed by the contractor and the buyer. Again, those formats the lender will provide. They have their own boilerplate forms, but they need to be completed for the lender. Again, one of the reason I harp on this is because many contractors will say, "I already gave you the bid. That's all I'm doing." No, this is the contractor's form. The lender's form. The lender requires it to be done this way. Cool. Next slide, please. Post-closing process. This is nothing that really needs to, if you're involved with a buyer that does this, you won't know anything about this, but what happens post-closing? No upfront fees. That's another important feature. The contractor that works on this has to have the financial strength to go through the work without receiving money until a portion of the project is completed. Let me say it again. If it's a large project, then they're going to be 5 draws. Contractor's not going to get any money until he or she, or if the contractor finishes the 20% required by the lender will then send out the renovation consultant to verify that portion of the work is done. The monies will then be released. For contractors to say, hey, I want to do this, but I need a 20% upfront fee. No go. That's not going to work. Okay. As you can see, really the sticking point here is a contractor that's got all the wherewithal, this financial strength to actually complete these projects, and good contractors and keep good records. Questions so far? Okay. Conventional, again, no upfront monies, can be up to 5 draws. Consultant performs the inspections, a final payout after final inspection, and title update. Here's a big one that we should discuss. You may be aware that sometimes contractors do contractor liens on properties. Part of this process is the lender is going to do title updates to make sure that there are no outstanding liens and that the contractor is not holding our buyer hostage. So again, the lender is going to require title updates to make sure that the contractor is doing what they need to do. Their subs are getting paid. That basically there's no goofiness going around that's going to haunt our buyer after all the work is done. It's very important. Okay. Tools for building. Okay. So here we get into what we can do to help you. We can provide yard signs that say special financing available, especially for if you're doing a listing and the property obviously needs updating. Put a sign out that says special financing available. That may not be that big a deal for properties that it may need a little paint job or something, but for properties that are in bad shape, most buyers are like, oh my God, well, how do I buy this? So we provide yard signs for you. We can do customized printouts of here's roughly what your monthly payment would be. Here's if your property needs 50,000, so that they see, hey, this is what I had in mind, and this is within my comfort zone. Whenever I speak with one of your clients, I'm going to congratulate them on working with you. And if you all are working on a property and it's going to be a renovation loan, I ask them to focus on the amenities of the location. It's close to the schools, it's close to your work, it's in a great neighborhood. The condition that it's in right now, don't worry about. That's why we're here. You have a team that's going to help you create the customized home that you deserve, that belongs to you. So selling and emphasizing the amenities of the neighborhood and its a proximity to what they need is the most important thing. In real estate, that what's the old adage? Location. I know that most of our buyers are looking condition. Have them put location as the primary driver, and then the condition is something that we can work on after closing. Next slide, please, Alyssa. Was there a question, Betty?
No, it's
Ron, I'm sorry.
okay. So this seems to be somewhat focused on properties that are somewhat distressed in kind of a major, well, possibly major way. But we have a buyer who looks at the house, loves the house. The only thing that really bothers them is the kitchen and the bathrooms, or just the kitchen needs an upgrade. Would this be an appropriate tool for that? Because they could live in the house while the kitchen and or bathrooms or both are being renovated.
Yes, Ron, 100%. This is the perfect solution for that buyer that says, I really like this house, but the kitchen is outdated and the bathroom is outdated. Not a problem. Let me have you speak with our financing expert, and we can roll in the cost of those renovations into your loan.
Good.
Yes, absolutely. Yes. And even for newer housing stock, everyone, let's say you have a home that's only 5 years old. It means generally a new home, but it doesn't have a pool. Don't let the fact that it doesn't have a pool kill the deal, because again, you can say, if the house is right for you and all you need is a pool, we can roll the cost of the pool into the loan. So let's move forward with this house. Let's get a pool contractor to write this up, chat with Armando, and the cost of the pool can be part of the whole finance. Again, and it's tax advantage because it's part of your home loan. So the interest is tax deductible. Absolutely, yes. Financing sheets, I can put them together. Counter tents that say, hey, special financing available. We've already talked about yard signs, word of mouth, probably the most powerful one. Many times, if we don't know that there's an option, we basically steer our buyers away from, okay, that's not going to work for them because it's in terrible condition. Show them the property's in terrible condition and say, hey, we have a solution for this. Is this the right neighborhood for you? Is this close enough to your children's school? So again, that we have options to help you take advantage of these financing options. Okay, gang, that we're done a little bit early. These are frequently asked questions. And for any of you that want a copy of this, I think we got to hang out till probably for at least another 20 minutes. How long have we been on, Alyssa?
So we are about 15 minutes shy of 2 hours.
1-5?
Yes.
Okay. So gang, we really have to hang out together for 15 more minutes because the state is pretty strict about the amount of time that we're together to get you the C credits. And I want to make sure that you get the proper C credits. So if you don't mind hanging out for the next 15 minutes, I'm really at this point just open to your questions, your suggestions, your feedback. We can make this just a good interchange.
Actually, just for clarity, you don't do, or do you do land loan mortgage? You want to buy land just for the purposes of building a home on it, combining those together. Do you or don't you do that?
So Betty, those are actually, again, two questions. Do we do land loans? The short answer is no. Do we do land and construction loans? The answer is yes. If someone has their builder already teed up, they have the final plans, the final specs, and really has this all together, and they found a lot that they want to buy and put that house that they've already agreed with their builder and the builder is got it going on, we can do that deal. What we cannot do is just finance a lot and say, okay, in 2, 3, 4 years, you may think about building a home. That deal I cannot do. However, local banks like Main Street or Synovus, I just found out, reach out to me, Benny. I just recently ran into a bank that does land and lot loans, and I can help you with that. But I personally, I can't do land only loans. Did that answer the question?
Yes, yes.
Okay, cool. Ron, you had a question?
Armando, are you Florida only? Are you multi-state? How do you operate?
I am personally licensed in Florida and Massachusetts. I can do a loan anywhere in the country through one of our divisions. So the answer is I can do it pretty much anywhere. It gets a little clunky if it's not Massachusetts or Florida because I can handle the deal directly. If I'm not licensed in the state that you need, then I have to work with someone that is. And again, then it's clunky because I'm not driving the train completely. Did that help? Yep. Okay. Great questions, gang. Bob,
Yeah.
you had a question?
Yeah, I did. You mentioned earlier about the mobile homes that you could do.
Yes,
Is
sir.
that mobile homes that own the land, or can this be used for a mobile home that rents land?
Question, Bob. Only real estate. So only if it's tied to real estate. Great
Okay.
question. Yeah.
Thanks.
The other one's considered a vehicle. Yeah, great question. Other questions?
Hi, Armando. Can you hear me? Okay.
Oh, the Twilight Zone. Okay, was that Tina? Okay, yes, Julio.
As a contract, once the work is done, who inspects it? Do we need to pay for a separate inspection to make sure everything was done to code?
Great question, Julio. The renovation consultant is going to be the inspector. He or she is going to be the eyes and ears for the bank. The renovation consultant starts with, okay, what would you like to do? And that same person is going to be visiting the property to do the inspections to release the draws. It's the renovation consultant that does the inspections. Yes, sir. Did that help?
Yes, one of the clients, once they talk to you, you said something about where to look for the consultant that is they have to be 203K contractor approved, or is there
So
a
if you-
listing
if you-
somewhere?
Yes. So if you Google HUD renovation consultants, you'll see a website. And if you can't find it, let me know. I'll send you the link. But HUD consultants, they have to be approved with. Did you get it?
Gotcha.
Yeah.
Yes, sir.
So it's a job. It's a real position. Great
Yes,
question, Julio.
Excellent. Yeah, I can help my clients like this. This is perfect. Thank you.
You're welcome. You're welcome. I think
Tina was able to message her question. She asked, can multiple of these Reno loans be written for the same buyer at the same time?
the answer is yes, with the assumption that they're all going to be investment property. So if you have a buyer that's right, we're working with a client. So if that client is buying 3 properties, we're going to absolutely. The answer is yes. The short answer is yes.
Perfect. And then I think she also had asked, do you have a vetted list? I'm not sure if that's referring to contractors or. Mhm.
The answer is I can, depending on where the buyer is looking, I will work with her and the buyer to find a contractor. Yes.
Perfect. Okay. Yes, she just clarified us for contractors. Okay, great.
Yep. Excellent. Great questions. Great questions. How did you all like this?
It was great. Very informative.
Awesome.
Good. And so did you find value in this? And is this something you all can use in your business going forward?
Oh,
Definitely.
yes.
Yeah, absolutely.
Good stuff. Alyssa, Meredith, and I are thinking about doing other presentations to help you. What other subjects do you think you'd like to learn about that maybe we can put together presentations on?
Armando, can I add something?
Yeah, sure.
So for this to be effective, so in my back pocket, obviously a renovation consultant, somebody that does the renovation loans like yourself. Who are the strategic partners that we need to each of us be aware of in our area so we could make this a lot easier to execute? Who are the people we should be looking for to be strategic partners so we can facilitate this in a heartbeat instead of looking at sites and trying to find somebody? Does that make sense? Have it all in line, and then like
Sure.
when they happen, you already know the person and how to work with and things like that.
Great question, Julio. I think contractors, as is evident by the question from, I don't know who asked the question, but basically getting contractors and having them understand that this is an option, because really they're the missing piece for all of this. Especially, we've gone through an environment where contractors have been just straight up super, super busy, right? They have more work than they can handle. That I think is changing. And finding contractors that are properly licensed, properly insured, and are looking for other markets to work and stay busy with, those really are valuable for us or the buyer, because that's really the missing component in this piece. Contractors that are properly licensed, properly insured. So having a conversation with them, it's great. And just like buyers that aren't aware of this, many contractors that I end up working with had no clue that this was a thing. So educating them and saying, hey, would you like to pick up some more work that's really, you don't have to worry about getting paid. This deal, you will be paid. Do you
Excellent.
have to
Thank you.
jump through a few? Yeah, you will be paid. This is not a question of is the money available? 100% the money's there. You got to do it this way, though. You got to do it the way the lender asks you to, but 100% you will get paid. Yeah. Great question, Leo. Other questions? So I was starting to ask, what other things would you all like to learn about that perhaps we can put together for you?
Where are you sitting? Or
Where am I sitting?
I think
Ask that question again.
someone didn't realize that they were off mute.
Okay. Okay.
How about appraisals, Armando?
Okay. I can work at getting an appraiser to chat with us and probably drive that discussion. I'm really good at lending. Meredith and her team are really good at law and closing. I can talk broad brush about appraisals, but let me share with you what's happening in the appraisal industry. Lenders and Fannie and Freddie and HUD have moved towards using artificial intelligence. Basically, they have this massive database of information. And in many cases, if I have a strong borrower and a property that's in a cookie cutter community and they're doing 20% down, I'm sure you all have come across appraisal waivers, right? The requirement for an appraisal or for an appraisal being waived means that Fannie and the lender have enough confidence in the value and the borrower that they don't need an appraiser. So an appraiser didn't make money this time. So the trend, unfortunately, is towards minimizing appraisers. If the lender can comfortably quantify that their risk is mitigated with the property and the borrower, in many cases, an appraisal is not needed.
Yeah, that's okay. I've seen that, and that's the way it's all going. But I know one thing, well, especially with myself with the villages here, and it's very hard to tell. Number one, I haven't had it happen to me, but I've heard some colleagues talk about it where the appraisal didn't come in where they wanted it to. And so when you try to talk to the appraiser, they just blew you off. Or they got ticked off and said, who are you to question me? Okay. But the big thing of it is when we're setting values, we see it because we deal with it every day. But it would be nice to know that if I've got house A and I've got house B and they're about the same, okay, one has a little more square footage and this house is on the golf course. What does the appraiser look at and what type of value are they looking at? Because property A is sitting in a neighborhood and property B is sitting on a golf course. How much extra are they putting in there on that? Or what is the rate? Just to get an idea of what their thinking is so it can help us when we're doing CMAs or anything else.
So, Bob, the best advice I can give is try to be there when the appraisal is done, because the appraiser doesn't know the market the way that you know the market. You're the expert in the market, And if you're there giving the appraiser comps, you're helping him or her, and the more information you can give the appraiser at the time of inspection or any time before the appraisal is done, you're going to have much more room to have influence than you will after the appraisal is done. Once that appraisal is done, they've signed their name to it. It takes almost an act of Congress to get them to change it. So there are procedures in place where if you say, hey, as to Armando, this appraiser was way off base, I will say, Bob, please get me 3 comps that I can send to the appraiser via their appraisal management firm, because I can't even communicate with the appraiser directly. After 2009, most of us can't communicate with the appraiser directly. If the appraiser complains to the federal government and says, hey, Bob's calling me too much, Armando's calling me too much, we get into a world of trouble. So the influence is done before the appraisal is completed. So at the inspection point, at the point of inspection, and we provide them in a kind way as much influence as we can at that point. I've seen appraisals change after they've been completed, and I've been doing this almost 30 years. I've seen it happen 3 times in 30 years. Once an appraisal is done and the appraiser has signed their name to it, it becomes record, and they're going to fight tooth and nail to change that appraisal. So do they do it? Yes. Does it happen often? No.
Yeah.
Did I answer that question, Bob?
Yes, you did.
Perfect. And while you said the villages, would you guys have any interest in talking about HECM for purchase, reverse mortgages for purchase downstream?
I'm not sure about anybody else on the call, but it never hurts to learn about them because there are changes.
Yeah.
Knowing what the
Okay.
changes are, I would
Okay.
say the answer to that is yes.
So we'll put something like that together. Benny, I think you had a question.
I was going to say, can you put something together for underwriting?
Okay,
Yeah.
we can do that. Yep. So basically, perhaps what lenders look at when underwriting a borrower? Yeah, I can
Exactly.
do that. Absolutely. So I'm going to just make a quick loan process, maybe. Yeah, I'll do the loan process. Okay.
In the
Yeah,
comments, we got reverse mortgage to purchase another property.
Yes, we could do that. Reverse for purchase. Yep. Good stuff, gang. Good stuff.
Can you give me some advice on, as a realtor, I have to be careful. I'm not a lender, so I have to stay in my lane. Well, on one hand, while it's good to be educated on knowing this, what are the do's and what's some do's and don'ts can you give me if I'm talking to a potential buyer and they're asking me about things on the mortgage side, other than the fact, hey, I'm just going to point you to this guy here. I stay in my lane.
And you said it beautifully, Benny. You can say, hey, you know what? I have a mortgage expert. He is going to be available for you as you need him. And Benny, you and I have worked for a little bit together. My commitment is to keep you informed at all stages. I will copy you on text, copy you on emails so that you're not wondering, hey, did Armando reach out to these folks? I wonder where it is. So I will always keep you informed of the process. Hey, the loan is approved. Hey, I'm working with the borrowing conditions. If I need your help to push somebody along that isn't being responsive, I'm going to engage you, but my commitment is to always keep you informed of every part of the process. But yeah, Benny, just say, hey, you know what? That's a great question for the lender. Have you reached out to Armando? Did you get him what he asked you for?
Okay.
Good question. Others? Are we close to time, Alyssa?
Yes, we are at 1:31, so we are at time.
Yay. Gang, I wish you all a wonderful holiday season. Merry Christmas. And I'm here for you. Please reach out to Alyssa or me if you want a copy of this presentation. I'll happily send it to you. God bless you all, and many thanks for attending.
All right. Thanks,
you.
Armando. Appreciate it. All right. Did great.
Great program. Thank you.
You're
Thank
welcome,
you.
Mariano.
Thank
All
you.
the
Thank you.
best.
Thank you. Was fun.
All right, you're done. Demonstrate. Enjoy me.
Great. And was I'm afraid of the giant in my heart. I'm very happy. Yeah, I know. Yeah. And I love their network. You know, like that.
It was great. I said, kids. I like learning. And then fun. We got it. Yeah. Okay. Thanks. Right. Then- Mr. Morris. Ladies, and you just help me say thank you again, and grabbing my stuff and
I'm so glad you did it. And I'm so sorry for the problem with the
it's learned. You're